Good afternoon, everybody. Thank you for joining this webinar. My name is Jan Koops. I'm the head of INDICATA in the Netherlands. The presentation will take roughly half an hour. Just go to the next slide with some details. The session will be recorded. If you have any questions, all the participants are on mute. If you have questions, please don't raise your hand. We have a chat box. You can put your questions in there. Our team will make sure that we will answer your questions. If we are not able to do it immediately in the session, we will contact you afterwards. If you have questions after the webinar, you can contact us via info@indicata.nl. The last slide also contains my mobile phone number, so please don't hesitate to contact me. I always like to hear your remarks or your questions. After the webinar, you will receive from us a video link of this presentation. It will be recorded, and you will also receive the white paper Tesla Model 3, the part 2, which was released in last September. The webinar is separated in a couple of topics. We'll start off with the introduction of Autorola and INDICATA. We'll do it quite rapidly this time because Frank already did that last time in September. We'll take a look at Europe, the trends in there, zoom in on the Netherlands, and then include all the battery electric vehicles. And we'll take a deep dive on the Tesla Model 3. And we also thought it would be worthwhile to look at Great Britain because it's a closed market, no import-export. So it's interesting to see how the electric vehicles are being absorbed in such a marketplace. Autorola. We were founded by two brothers, Martin and Peter, in 1996 in Denmark. Now, we've had quite a history, and in the last couple of years, a transformation of the company. And it's worthwhile to mention that this has also been recognized by companies like EY or PricewaterhouseCoopers. If you look at Autorola, I won't read all the text, but the main message is we have a coverage across Europe. We are expanding into America, Asia. We've been here for 23 years, and we have 750 colleagues servicing our clients every single day. The business units of Autorola, I'll separate them into three. Today we'll talk about the left side, INDICATA, which is the business insights, market insights part of the business. We can inform our clients of stock management decisions, fleet monitoring, forecasting, and residual values. And that's the topic of today as well. In the middle, Autorola, a known brand for the online auctions, and on the right side, solutions, customized solutions for assets and workflow management. Now, what is INDICATA? We always explain it. It's a used basket of data, and that's a basket. The basket gets filled every single day with around 40 million vehicle adverts online from OEM websites, from dealer websites. Now, that data is raw data, and what we do is we clean the data, we harmonize it, and we make sure that, well, we have now almost one of the largest vehicle catalogs in Europe, I would imagine. We use all kinds of rules to identify these vehicles, including, for example, AI techniques. You can imagine that a car with a different headlight indicates a different facelift. So everything that has value in the car is important for us because it determines the quality of our data. So we put a lot of effort in that. This allows us also to recognize the car in your stock or in your fleet and estimate the current value in the marketplaces. Now we have the retail values, and we also can estimate very accurately the max purchase price. Of course, we have our own auction platform as well to look into. And one of the main KPIs we also have is marketability score, what we call market day supply. This gives a very good indication of the attractiveness of a car, the marketability of a car in the marketplace. Now, I can imagine you would like to understand the definitions of market day supply. In the appendix, we have some examples. So if you have questions about it, please see the appendix as well. But otherwise, you can always contact us. Now, this data is being shared with clients, and we have our own BI systems that you can look into and that we share with our clients. But this is also possible via an API solution. So from a management point of view, up to API level and single taxations for valuations for single cars on the license plate level is possible. trigger for the webinar. In 2023, in September, we released a white paper on the Tesla 2019 Model 3. Because we could foresee that there would be a huge discrepancy between the supply and demand, which would have an impact on the used car market. We did quite a deep dive study, and we could estimate that the residual values of those cars would face a depreciation of around 20 to 30%. Last year in September, we did a review. We could confirm the assumptions that we had in the model based upon the current market trends. What we also saw was a proactive market approach. We were faced with early trade-ins, second cycle lease, flexible lease contracts are really a focus now in the marketplace. What we also noticed is that the Tesla is still a very attractive car. It has a very interesting marketability, but this is also due to the targeted price measures. There's a lot of price support in place. And what we could see also is that we saw actually a depreciation of the residual value of more than 13% than what we anticipated due to this proactive market approach. Now it's now December, just a couple of months down the road, but we've seen quite some interest in the media, headlines on what's happening in the marketplace. So we thought it would be interesting to inform you also of the current status in the market. We will also, and I'll include that on the last slide of the presentation, do a review within probably in April when the quarter is closed, and we'll take a look back at the 3 months that we are now facing. So that's the introduction. Let's look then at Europe. I'm going to start with Europe, then zoom in on the Netherlands, and I will include the battery electric vehicles, and then do a deep dive on the Tesla Model 3. Now, what's happening in Europe? Probably a familiar screen for you analysis. We look here at the market shares in the market of the different fuel types in Europe. It starts on the left side on January 23, and on the right side, we look at December 24. So we're looking at 2 complete years. You can see the decrease of diesel, especially. It has decreased 10% points in the last 2 years. You see the petrol engines are losing popularity a little bit, but especially the hybrids are gaining popularity. And at the bottom, you can see the EV market share in orange, going from 2% to 6%, tripling its market share in just 2 years. I thought it would be worthwhile also to take a look at what's happening in the new car market. So on the right side, you see the 6% market share of EVs in the market. If we look at ACEA, which is the Importers Association in Europe, we can take a look at the current market shares in 2024. Now, the market share of EVs in the new market is 13%, and you can imagine that will also cause quite a flow into the stock in the next couple of years, because those cars need to be absorbed in our marketplaces in a couple of years from now. If we take a small step forward to the battery electric vehicles, but then 3 years and older, because this is the market segment where the Tesla Model 3 will also be competing, we can see quite a rapid growth in its market share. The sales share is now at 3.8% in last December. And if we look at the stock, we can see actually that the stock share is 4.1%. So there's a little bit more share in stock than there's in the marketplace, which makes sense because it's a growing market, and there's still quite some cars coming into the stock at this point in time. What we do see is a change in the supply versus demand. So what you see here is I made a small table with 6 months of figures in the last couple of months. First column shows the stock share, second column the sales share, and also the ratio between those two. Now, what you can see is that the stock share is around 3.9, growing to 4.1% in the last couple of months, and the sales market share is growing a little bit more rapidly, which means that the ratio between the two is changing. It becomes more of a balanced situation. What we did notice is that we did a deep dive in the first week of January as well on the stock, and we could actually see that the stock share at the first week of January was 4.6% market share. Now, the January month is not closed for sales yet. That will take 1.5 weeks. Then we'll take a look at the market shares again, of course, and see how the comparison is between the two. If we look at the market day supply, that's the marketability of the battery electric vehicles. we can see for the last 2 years the marketability of the electric vehicles, and you can see quite a decrease there. Marketability is measured in days, so the lower the score, the better the marketability, and you can see quite a decrease in the number of market days supply. This indicates clearly the attractiveness of those cars. What I also put there is as a reference point the battery electric vehicles at around 77 days. You can look at diesels, which is 62 days, and petrol is now at 64 days. But you can also see in the last month, in January, is already first indication that there's actually an increase in stock again, which has an immediate impact on the attractiveness of those cars. If you have more questions about market day supply, please look into the appendix, which will have a detailed definition. The market day supply, attractiveness of those cars is also being supported by price. And here we look at the G5 countries, the price index of electric vehicles. You can see I start in January 2023 at 100%, and at January 25, you see a decreasing residual value of those cars. Quite a depreciation. It's worthwhile to note as well that we use in the price index a basket of comparable vehicles. So we actually track the same kind of vehicles across those 2 years, so we can have a really good index of those cars in the basket. What is also noticeable is that in the last half year, say from the summer holidays, you can see a little bit of a stagnating in the price trend. Strong decrease seems to be stagnating more and more. If we take a look at the Netherlands, I've added a couple of the smaller countries in Europe as well. In green, you can see the Netherlands. Still quite a decrease in the last 2 years. We're now at minus 31%. Well, there are some signs of stagnation in other countries as well. Then we go into the details for the Tesla Model 3. I'll start with Europe to show the environment over there, and then we'll zoom in the Netherlands. Why the Tesla Model 3? Just as a summary, there were a lot of cars registered in 2019 due to taxations. And especially in the last couple of months, we had a lot of Tesla Model 3 being registered in the marketplace. Now, first of all, I thought it would be worthwhile to look at the stock levels of those Teslas. So what you see here is the portfolio of Tesla. The blue line showing the stock size of the Model 3. And it's the cars aging 3 years and older, because that's where they will be located in those age band. So you can see the increase in the Model 3, and it now has in stock almost 5,000 cars. What you can also see, if you look at the increase of the Model 3 in the last, let's say, from April, you can see quite an increase in the Model 3. At the same time, it's also quite noticeable that there's a decrease in the other models. So there's actually a mixed portfolio impact here, which is an indicator that stock size is not that flexible. This is also something we learned from our dealers. They take specific risks in their stock. It's the size of the stock that matters, of course. It's the mix that matters, and it's the price impact and the financial risk you want to take. And also something to consider is you can't store an electric vehicle for months and months because you need to charge the battery, etc. So it's not that easy to be flexible in the stock. If you look at the sales, we can see actually quite a steep increase in the Tesla Model 3. It's a very popular car. At the moment, the market is around 3,800 cars, 3,700 cars each single month. There's some seasonality impact on December and January as well, but you can see quite an increase. And if we take a look at the stock, so let's put stock and sales next to each other. Put it in the table here. First column, you can see the stock. Second column, you can see the sales. And you can see them actually, that the stock in the last couple of months is increasing just like the sales is increasing. But you can also see that the stock is increasing faster than the sales. And that's why the ratio is changing. Now, you can also see here that we did a measurement in the first week of January. January sales is not closed yet, so we can't make that comparison yet, but we'll do that by the end of the month. What you can also notice is that Tesla Model 3 in the Netherlands is a very attractive car. These are the marketability scores, and marketability scores of 40 days, 35 days, 40 days is really best in class. Just as a reference point, this is popular electric vehicles in Europe. And you can clearly see that the Tesla is by far performing as best car in the marketplace. It's a very attractive car to have in your stock. However, you also can see quite a price support level there. Again, here from January 2023 to January 2025, in the last 2 years, you can see the depreciation curve of the Tesla Model 3. I added also the Renault Zoe in there. You can see the Tesla is around 30% decrease. The Zoe is around 12, and you can see petrol and diesel decreasing somewhat because you also have a life cycle depreciation. And of course, at the level of petrol, you have some mix of effects in there as well. If we look at the stock, and we're now switching to the Netherlands, I'm looking again at the different models of the Tesla Model 3. So we look at the Model 3, we look at the Model S, and you can clearly see the increase in stock in the Netherlands of the Model 3. It's growing now up to almost 900 cars in stock. At the same time, and this is something that we noticed in Europe as well in the previous slides, you have an increase in the Model 3. At the same time, we have a decrease in, for example, in the Model S, which is quite visible, and the Model X. Once again, this clearly indicates the choices that people make or dealers make in their stock size, in the mix, and in the financial risks they want to take in the next couple of months. And we can take some deep dives here as well. What you see here is the Tesla Model 3, but then split out by the different age band. And you can see here as well the focus on the 2019 model, which is clearly on the increase, while the younger cars are a little bit on the decrease as well. And we can take another deep dive. I thought it would be worthwhile to take a look at some of the competition as well. So if you look at the stock size of competitions of the, at least of popular EVs, you can see here the stock size of the Renault Zoe, clearly visible after the summer, the decrease in stock. We can look at the Hyundai Kona, and we can look at the Audi e-tron. You have a little curve again in January, but it's clear that there are clearly some stock decisions being made over there. If you start looking at the sales of the Tesla Model 3, again, first split in different age bands. So you can see the 2019 cars. It's now at more than 800 cars being sold every single month in the Netherlands. And if we then look at the stock versus the sales, and then you can see quite an interesting picture. First column shows the stock per month, and then the sales per month. And usually you had more cars in stock than in sales, but you can clearly see the ratio changing every single month. And if we then look at October, November, December, actually something happens over there, because you can clearly see the lower levels of stock, even lower in some occasions than the level of stock on each month sold. Meaning there's actually quite some decisions being made and being cautious in the stock decisions of our dealers. If you look then at the marketability of those cars, you can see that the marketability of those cars is still very solid level. Scores of 39 days, 40 days is really exceptional. Also in the Netherlands, I've just added a couple of those other EVs in there, and you can still see that the Tesla Model 3 is a very attractive car to have in stock. It's a popular car. Still, it's a popular car at the current stock versus demand levels. If you look at the price support that's needed to reach those marketability levels, you can see here the depreciation curve of the Tesla Model 3. Again, 2 years starting in January 23 up to January 25, and you can see almost 30% decrease in the price index of a comparable baskets of Tesla Model 3s. Again, some of the reference points in there. So you can imagine what will happen if the stock and sales ratio changes. It will have an impact there as well. We also thought to look a little bit deeper into the different versions of the Tesla Model 3. So we show here the standard range, which has less performance than the other ones. And you can clearly see, and be aware, I changed the index here. So we're only looking from January 24 until January 25, because then the visualization is improved a lot. You can clearly see from October that the depreciation of the Tesla standard range is accelerating actually. So it needs more price support to reach attractiveness. Then we take a look at the next couple of months. The issue in the Netherlands is that there's a lot of Tesla Model 3 from 2019 in the car park. Now, what we're looking here is at the number of cars in the Dutch car park. This is the official registrations data from the government. Visualizations thanks to Kenteken TV, which makes it quite interesting to look at. And what we see here is that there are, at the moment in the Netherlands, still 24,000 cars driving around. We had 30,000 cars in history, but 6,500 cars were being exported. If we look then at those cars, we can actually have a little bit more of a deep dive. And on the right side, you can see the registration changes. So what we can see is that there are 8,000 cars, majority of them lease cars, still at the first owner. And what you can also see is that in the last couple of months in 2024, we had 12,000 cars change of ownership. Doesn't mean that they're online published. Change of ownership can also mean that they're now being stocked at leasing companies or dealers. So they will be entering the market. Now, we've seen just a couple of slides before what the sales ratio is of those Teslas. So you can imagine there's quite a volume entering the market in the next couple of months. I've put here the stock and the sales again of the Tesla. So you can see we have around 900, maybe more cars in the next couple of months entering the marketplaces and the stock. And if you look at the opportunities in other countries, I thought it would be interesting to put the other countries in there in Europe as well. And you can see the different markets there as well. Now, it's very clear that the size of the car park and the cars that are being that will be entering the marketplace within this year, within the next couple of months, and the size difference between the stock and sales in each of the countries in Europe versus what's happening now in the Netherlands, there's quite a discrepancy over there. Now, I'm not, of course, a data scientist, but if you look at very simple calculations, if I round it off a little bit, let's say we have 3,000 cars being sold in Europe every single month. In the Netherlands car park, we have 15,000 cars available coming into the marketplace. It clearly shows the sizing issue that we are faced with in the next couple of periods, in the next couple of months. Now, we take a step back and look at the electric vehicle market in the Netherlands, not just the Tesla, but the total electric vehicle markets of cars older than 3 years. You can quite see the increase in sales. Still, again, I thought it'd be worthwhile to look at the stock. So if you look at the stock, you can see it's around 6,000 cars each month. That seems to be sufficient to support this level of market. And what you can also see is there's a balancing act there as well. Yes, there's more stock than the sales, but you can also see the balancing in the last couple of months. Marketability of those EVs is still very good in the Netherlands. Big part of it is of course the Tesla, but you can see marketability scores of electric vehicles in the Netherlands. They differ per model, but in general, electric cars are even more attractive than petrol cars. They have a marketability of 77 days. Electric cars are below 60 at the moment. So that concludes the presentation about the Tesla Model 3, and then we'll take a look at Great Britain. Now, why Great Britain? It has no import and export. So it means that all the cars in the market needs to be absorbed in that marketplace, whereas Netherlands is a very open market. There are 300,000 new cars sold each year, but there are all 300,000 cars being exported and imported. So it's quite an open market. So that's why Great Britain is an interesting market to look at. We'll take a look at the fuel market shares at first. So again, a recognizable picture, I think. Petrol is a little bit on the decrease, diesel is on the decrease, and hybrids are getting more popular, just like the electric vehicles. And electric vehicles have a market share of around 5% in the last half year. So what has happened in this closed EV market? It's interesting, first of all, to look at the market share in sales versus the market share EVs have in stock. And you can see that the market share in sales is around 5%, more or less. And you can actually see that the stock shares are also in the same bandwidth. So it's actually quite, the proximity there is quite closing, and there's also a stable proximity. It's more of a balancing act. Now, how did we get there? If we look at the marketability of electric vehicles, again, 2 years, you can see where it's coming from. But if we look at the last half year, you can clearly see that the marketability of electric vehicles are almost comparable to those of the conventional cars. That required quite some price support. In this chart, we see the price index again of the electric vehicles. The gray line at the bottom, that's the UK. You can clearly see the depreciation over there. It's now, I would say, almost minus 40%. As a reminder, the Netherlands was around 30% now, and you can see also the other countries. So it required quite a depreciation to get to that stable level. And now, last half year, you can see the stability getting in there, the stagnating efforts. If we then look again at the Tesla, not a big surprise, it shows the same kind of curve. So we've added that one as well for your information. Now, this concludes our presentation and the webinar. We had a review in September looking at the Tesla Model 3 deep dive. We are now a couple of months down the road. We're in January. What we could see actually is a confirmation of the assumptions we already had in the model. And we could see actually that the proactiveness in the market approach is continuing, especially now in stock decisions. That's visible in the Netherlands, where you actually have almost an understock situation. Tesla is a very attractive car, but it does require quite some pricing measures. And we've shown you that the standard range especially shows some accelerated price support. Now, I want to thank you for your time. The next update we'll do is in April. We want to close the quarter first and then take a look back at what's happened in the last quarter. If you have any questions, you can always contact us via info@indicata.nl. I've included my mobile phone. Please don't hesitate to call me for your questions or your remarks. Thanks a lot for your time.